Aloha, Big Wave Trading family. This is Joshua Hayes here at BigWaveTrading.com. Want to first, really quick, talk about the market. I heard the words top and bottom used way too much the past week. It's impossible to know if we're at either or if we're just going to chop around. So the best thing to do is just be prepared for everything in the future. And that way, the next time the market rolls over like this, you'll be sitting in my situation completely prepared, completely ready, taking advantage of any kind of new buying opportunity instead of just continuously licking your wounds and praying for the selling to end. Now, fortunately, for those that want the selling to end short term, I would think that we probably have seen a decent low on Friday. For how long, to what length, I don't know. But to continue to break to new lows, reverse on heavier volume near the 200-day moving average on the NASDAQ, at the 200-day moving average on the New York Stock Exchange, right above the 200-day moving average on the Dow Jones Industrial after cutting to new lows, and on the Russell 2000 doing the same thing at the 200-day moving average. I would think that we probably see a tradable bottom at the very least here. We'll see how the bounce acts going forward, but I wouldn't be as confident that we're probably at a tradable bottom here if it wasn't for that total put call ratio. That thing hit 1.30 on Friday at the close, and I can't remember the last time I've seen the put call ratio. At IBD it shows 1.26, at stockcharts.com it shows 1.30. Either way, we're splitting hairs. I can't remember the last time I've seen a number that big. And that, along with the VIX hitting 40 again on Friday after touching 50 on Tuesday, is another hint that short term at least we might have seen what we've seen. But you know, nothing's guaranteed, nothing's for certain, but one thing I will continue to do is, for now, a signal is a signal is a signal. Despite the massive sell-off and everything happening, I never switched my market models to a sell signal. They were under neutral sell signals the entire time. If at the close of Friday we would have closed near the lows of what we saw intraday, everything would have switched to a sell signal. But as it is, with the 50-day moving average still uptrending, even though it will be rolling over, and with the 200-day moving average uptrending still on every index, you can see finally on the New York Stock Exchange it's starting to tick lower. On the NASDAQ starting to finally tick lower. So, but it's still overall uptrending. Models are kept under neutral. And with that being the case, as long as new long signals keep showing up, I'm going to keep taking them. If everything would have failed that I was already long, along with all the new long positions failing, I would not be trying to hunt to try to keep my toe in the water here with stocks. But since I still have a lot of stocks uptrending since my entry, I just noticed I went through 150 stocks that I'm still tracking on an end-of-day basis and or still long. I happen to pull up this weekend what the percent returns are in Telechart since adding them to the list. Out of those 150, 135 are up, 15 are slightly lower. So that means that there's 150 stocks that are still uptrending overall since my entry signal. That's not the sign of a market that looks like it's going to completely break wide open. It's also not a sign of a market that's in a bear market. So as long as all of this stuff is out there, I'm going to keep trying. Just going to keep small position sizes, tight stops. Now you, if you're limited on your account capital, if you pay too much in commissions, probably do not want to trade here. Watch me, watch how I get a feel for the market, and if the market continues to move higher over the next week, you'll see me increase position size. Maybe I'll loosen up the stops. I doubt it, but it's quite possible. So with all that in mind, let's get to the new long positions. The first one is Twitter. Twitter was in my CanSlim quality scan and my Perfect Speculator scan and was in a lot of other side scans. It's an earnings winner. It tested that support on Friday, rallied and closed with a very nice near full body candle print. Heavier volume, above average volume, I should say, not heavier in the session before. And there's a lot of green bop and max green bop in this stock. And look at what it's done despite the weak market. So if the market does take off, this stock is going to probably be a leader. But unfortunately, there's a lot of risk involved if we don't just use the recent lows, and the odds that the recent lows will be tested is high, so you got to be careful here. What I'm doing is I'm going long, limit order, and 31.51 the close. First cut loss 29.67. The next cut loss is a gap fill at 27.33. If it fills that 27.33 high a day mark right here, excuse me, right there, then I'll be all about a Twitter. But if you go long Twitter as a test buy, just use the recent lows. Why? Because even if you're wrong, we're still risking about 5% to that first stop level. And in this kind of tape, you know, you just want to be careful here. Everything's extended, so keep that in mind. Everything's volatile, so keep that in mind. But I got a game plan. Twitter, 31.51, 29.67 stop, 27.33 stop, 2% of my account capital, and here's how I arrived at that. Oh, 1%, excuse me. So 2% for canceling. 2% for perfect speculator, that's 4. It's extended from the 20-day moving average, that's half, it's 2. It's extended from the 10-day moving average, it's half, that's 1%. So 1% of my account into Twitter, I think I mentioned on the website is 2%, but that is a mistake. The next new long position is EC. EC, canceling quality stock, perfect speculator quality stock, right at support at the uptrend 50-day moving average line. This one's clear cut. I want to get long, 1690. Cut my loss if it moves below 59.90. There is no other support to use. So if this thing doesn't bounce and move higher immediately, it moves below 15.90, I'm out. I'm gone. I'll risk about total about 4 or 5% once again on the trade because this is a higher beta issue. So once again, position size accordingly. But 16.90 is going to be my entry. First cut loss and only cut loss level, 15.89. This is a canceling quality stock and a perfect speculator's quality stock. So it's a 4% position. But with the market being the way it is, I don't want to take a 4% position. The 200-day moving average is too extended. I do not want these stocks extended from too many moving averages. And the other concern to me, right now I have a rule of going long stocks above the 5-day moving average first. But when I can get such a great reward risk ratio trade on a canceling perfect speculator stock, I'm obviously going to go ahead and adjust the rules a little bit. So with EC being right at support, the rules are adjusted. But still, with it being below 5 and with it being below 200, I consider this a quote extended stock or a not right setup stock. So instead of 2% of my account capital, or instead of 4% of my account capital, it's going to be 2%. So it's supposed to be 2% for canceling, 2% for perfect speculator, slash it in half, 2%. If it doesn't work, I'll know immediately. And then SYBT, this is a semi-canceling quality stock. Once again, the setup's pretty clear cut. I want to get long, limit order 36.40. Your first cut loss is right there, 34.90. Your final cut loss there is right there, 34.35. This is a beautiful looking stock that despite the market pullback, a lot of accumulation, and it held a lot of green bop. So it definitely stands out over a lot of stocks out there. It was confirmed in another scan, so it's definitely good to go. Now, I also have 3 other speculative, perfect speculator quality stocks. And all 3 of these are biotechs. KURA, IMMR, and KMPH. All biotech stocks, all did very, very well during the recent market pullback. I'm trying to find a relative strength line here. There we go. There's the big, thick white line down here. Look at the relative strength line on IMMR. Stock pulls back, but the stock's relative strength line stays pretty strong because it did way better overall than the market. Same with Kura. Look at Kura. Pulled back to the 20-day moving average, relative strength line, hitting new highs after Friday. So once again, if this market turns around, this is the kind of stock that leads. KMPH. You can see the pullback here. Look at the relative strength line. Still uptrending overall. Compare that to like a stock like Apple. Look at its relative strength line. Yeah, see the market's hitting, the stock's hitting new highs. Relative strength line's not negative divergence, but now look at the relative strength line, still, you know, pulling back hard. But if you look at KMPH, you look at IMMR, you look at Kura, and then you look at HBIO, which is giving me another ad signal in the middle of a nasty market pullback. You know, these are too good for me not to take, so I got to take them. Keep tight stops. KURA. Perfect speculator quality. So all of these, KURA, this is going to be 0.5. IMMR, 0.5% of my account capital. KMPH, 0.5% of my account capital. HBIO, only 0.25%. HBIO might be touching its 20-day moving average, but as you can see, the stock's below the 5-day moving average. That's problematic. KMPH, while it's at the 20-day moving average, you can see it's also below the 5-day moving average, so it's not quite ideal. IMMR, as you can see, extended from the 20-day moving average, slight problem. KURA, everything's pretty much lined up on that one, but once again, see how far away the 200-day moving average is? I consider it extended. So all these stocks are extended from one degree or another from moving average, so that's why we got to be careful with them all. But KURA, 1930, my limit, high day, my one and only stop, right there, 1745, moves below 1750, I'm out. IMMR, getting long, limit order, 976, because it's extended, so I'm using the close. My one and only stop, right there, 932, goes below 933, I'm all out. KMPH, 590 is my limit, since it's not extended from the 20-day moving average. Now here you could work it a little bit. 535 it goes below, you're out half, goes below 506, hits 505, you're out another half. And or if you actually do, if you're a new trader, you decide to trade it and you have limited capital, no matter what, ignore that last stop that I'm using on this one at 505 and only pay attention to 535 and or 525. So if it hits 530, you're all out, or if it hits 520, you're all out. Do not use that final stop, as that final stop is going to probably have the 50-day moving average come into play before it gets there. And if the 50-day moving average lines up with this and the stock's moving higher, I'm going to be removing this stop. So it's not one that I'm going to keep hard on the books for the entire time. And then with HBIO, same situation, getting along, 455, that 425 level. Now I am also using the 410, where is that? Right there, 410 level. So if it goes below 410, I'll be all out. So right now, half my stops are here. My final stops are right here. But if you decide to take this trade with this market, it's all about risk management right now. You want to have as much capital at hand and ready to go hard if we get a strong follow-through day in this market. One day does not mark a new uptrend, but it's a nice start, especially with that put call at 1.26. I also have one other buyback signal that I'm considering also as an add signal. So if you don't have it, it's a pretty damn good signal. Never lost positive bop, held up good during that pullback. Where's that relative strength line? There it is. It's not great, but it didn't come crashing down. Held up pretty, it held up above that previous base relative strength high. So you can see old resistance becomes support. It's holding up there, looking good. Bop is growing, back to max green bop. You got heavier volume on the reversal today. STAA, I'm adding it, buying it back, limit order 1550. First cut loss, move below 1475. Friday's low of day, 1470. Final cut loss, 1420, move below 1425. All right, everybody, I will see you in the chat room on Monday. We shall see what this market wants to do. But with the put-call ratio at 1.26, a re-break to new lows in the Russell 2000 and Dow Jones Industrial Average, convincing everybody that Armageddon was here, and with the reversal on heavier volume, it seems safe to say that we should expect a bounce. If volume would have been lower than the session before, maybe not, chop around, but there's some positive signs following Friday's session. All right, everybody, aloha.